Red alert. HSBC issuing a warning that stocks are heading for a free fall, citing how similar current trading patterns of today's major indices are to the major stock market crash of 1987. Here now to weigh in is Scott Martin of Kingsview Asset Management and a Fox News contributor, and Veronica Dagher of the Wall Street Journal. Scott, I remember 87. I mean, times were very different back then. Do you really make a parallel to today?
I don't, David. I mean, I was playing a lot of Nintendo Entertainment System back then, so I, too, had my problems in '87. Thank you, Super Mario Brothers. But I'll tell you what, David, there's some parallels, but not a ton in the sense that I don't think we have a black swan event, like a major market crash coming. But what we do have is something that I think is holding up equity prices, which has been low interest rates and massive central bank intervention. If that goes away, if the Fed starts hiking again in December and further on down the road, I think that's your big risk to equities, not some big event like an '87 crash.
Veronica, many people would say this election is a big black swan.
Yes, indeed. I think there's a lot of people very worried about what's going to happen in November. That's a huge uncertainty for the market. They're pricing in certain things, but still, you never know. So you've got the Fed, you've got the election, you've got China slowing. So investors are sitting there saying, oh, what's going to happen? I think if you're an average investor sitting at home and you're getting worried and you're near retirement, you may want to think about having 10% of your portfolio, 10% of your expenses in cash. So if we do see a big market dip, you're prepared to pay those bills without pulling out that money at the bottom.
Good advice.
That is good advice.